Welcome to Going In Blind. I'm your host, Zach Tidwell, and my guest this week is a lawyer who's really cut his teeth in arbitrating different investment fraud scandals and things like that over the course of his career. He's got an incredible wealth of experience and a lot of accolades to his name that I will not even try to list off here because it's kind of ridiculous. So I'll leave the intro at this and let Mr. Scott Silver, who is the managing partner of Silver Law Group, introduce all of that himself. But before we do, just a couple quick announcements on my end, as usual. If you're new to the show, head on over to zachtidwell.com so you can read about the powerful story behind trying to share other people's stories on this podcast. If you've been listening or watching for a while, go ahead and leave a rating and review wherever you're listening, or if you are watching, subscribe to us on YouTube. That just helps keep attracting guests like Scott to come on the show and helps us continue to grow and spread the word. So I think that's everything I have for you guys this week. So Scott, thanks for being here.
I appreciate you having me on.
Yeah, I really honestly the background information that I was sent about you is kind of was kind of mind-boggling a little bit with as I kind of hinted at in the intro, but I did notice because I want to hone in on just, this is a different level of fraud. Everyone knows there's a lot of scams out there these days. I feel like that's more in the zeitgeist on a personal level, but you're doing it on a much more meta level and it's very intriguing to me. But I noticed you actually kind of got your start working on Wall Street. It seems like defending some of these companies, not necessarily that we're doing wrong, right? Like but you were defending companies and that eventually led you into helping the individuals now, right?
Yeah. So, I appreciate the intro. I've been fortunate to be involved with several organizations over the years, but really, I've had two jobs in my life. After graduating from law school, I started with a Wall Street defense firm where I defended a lot of brokerage firms, stockbrokers, hedge funds who were accused of panoply of various frauds and misconducts. Everybody loves part of my backstory. Back in the 90s, I did a lot of defense work with the brokerage firms that were affiliated with or working with the firm that was made famous in the Wolf of Wall Street movie. But I knew my personality, I knew my style. And people, some of the older listeners remember back in 2000, the stock market crashed. It was the tech wreck. Everybody was wondering where the internet was going to take us. And the major brokerage firms, Merrill Lynch, Morgan Stanley, Wells Fargo, were all accused of using their research department as cheerleaders for all these IPO, the tech stocks. And companies, had hand puppets that got valued at billions of dollars. And I switched sides and I began representing investors. And that's all I've done for the last 25 years is securities and investment fraud cases. And really all I want anybody to know about me is that I'm a passionate investor advocate. I really love speaking about this and actually teaching people how to avoid being victim of a securities or investment fraud, how not to get involved in a Ponzi scheme. I kid around a lot that my main goal is to put my own law firm out of business. But I think as long as greed is out there, somebody's going to be cheating somebody else out of their money.
Yeah, that's human. That's a human nature thing. It will always be around. So you're not going to run out of business anytime soon. But I wasn't sure if we'd be able to get into this or not, but I'm kind of curious if you have any takes on this. I feel like we are kind of, at least in the early days or the inflationary period of another bubble. There was the dot-com bubble that you kind of talked about, but like I think the hyperscalers of all these large language models are very much so doing the same thing. I think, so I'm a tech guy. I'm a software developer. I think the claims that are made by these companies are greatly overreaching, and I think the reason that they're doing or making a lot of these claims is obviously to prop up their stock prices, and at the same time, it depends on obviously who you're listening to with the information. I take things with a grain of salt when it's coming from the founder or the CEO of a company like that. But when you hear some people who read into or try and get a better read on where these businesses are going in the rate at which they are raising funding versus the state of where things are and the cost of what it takes them to do, like for processing an image. That we are kind of right now basically in the inflationary part of the bubble, with everyone continuing to throw money into this with the expectation that, or knowing that, right now we are not, we are eating this money away, but over, maybe by 2035 these things will finally become profitable and not just be burning money as fast as possible. Do you what's your take on all
I
that?
fully agree. I fully agree with you, especially when we had these cycles. First of all, the stock market itself, right, is always cycling. There's up periods and there's down periods. And we've actually been, in an up market for many years now. But now we had this new technology and everybody's talking about AI. We actually just wrote a great article about this issue that you're touching on with that. All of a sudden, it's incredible. I'm the only person who doesn't claim to be an expert when it comes to AI. Every company out there is suddenly an expert on this
Yeah.
incredibly complex issue and technology. And a lot of companies are simply claiming it in order to raise more capital. And that's fraud. They're lying, right? They don't have the expertise. They don't have the manpower. They don't have the capital. I mean, AI is incredibly capital intensive business to, whether it be for running software or maintaining the hardware. Um, AI is still very much in its first innings. There's going to be winners and there's going to be losers. But right now, I think when it comes to investing, people have to be very careful that everybody is claiming to have an expertise in some area of AI. And that simply can't be true. And there's going to be a lot of money lost, and especially mom and pop investors really need to be careful. I was looking at a company the other day. They claimed to have a technology that was going to revolutionize AI again. The company's market cap was pennies, was nothing. And I'm like, listen, statistically, they're not telling the truth. They're not. They don't have the resources. They don't have the intellectual firepower to be doing what they claim to be doing. Now, what's guys like Larry Page, Elon Musk, and others are up to? You know, I wouldn't be the man to talk to about those questions. But at least
Yeah.
they have the financial resources to be exploring.
Yeah, and I didn't know, obviously. So I'm 30. I wasn't aware enough of the world when the dot-com bubble crashed to like have an insider draw parallels to, okay, does this feel like it did, 25, 26 years ago? So that's why I was just curious with you, if you are, if maybe me trying to connect those dots is an incorrect, comparison, or, but
Now,
um
when it comes to investing, there is some things that feel very similar, and it feels very much the same. And we see it in every cycle from the tech wreck in 2000, investing in real estate and mortgage-backed securities in 2008. So I'm 54. I got a few years on you. So I very much remember. I remember a day where, getting my first cell phone when it was a new technology, when Amazon was who's going to buy books online, and that's all Amazon did. Um, is the internet going to be a thing? Like I remember actually debating that question, as if there was a argument to be made that the internet was going to go nowhere and flop. And we suddenly had it just a few years ago, and it's still an ongoing conversation when it comes to crypto. It has been
yeah.
10 years of this, what has obviously had a massive impact on. So we all talk about it, but 7, 8 years ago, I remember talking about we're gonna be using crypto to buy pizza in 2025. That certainly hasn't become mainstream, but crypto is part of it. And I'm a great lawyer, but a lousy investor. I have no opinion whether or not it's going to boom or bust over the next few years.
But yeah, it's always an interesting thing. I think part of that is, again, yeah, like this is, I do remember the crash in '08, but that was, again, limited real insight into what that meant for the world because I was still a kid. And then now this is kind of like, I feel like my first one where I can actually see this thing playing out. And I'm like, this doesn't look great. But so, you, taking it back more directly to your experience. So I guess The natural leap here was you had your time on Wall Street, you learned what you could from that, and then decided to kind of changing teams is almost like that's not the correct term, but you switched your focus. And why'd you do that?
So it was incredibly fascinating. I worked for some great attorneys. I learned a great deal. But while the lawyer in me would say everybody deserves a defense, um, I was representing people who were accused of, and in many cases were guilty of simply trying to defraud mom and pop America. I knew my personality. I knew which side of the V I wanted to play on. Um, I was very fortunate in 2002. Um, After the tech wreck, got with some lawyers. We launched a practice that um, representing the investors. And I do believe, and this is so many areas and aspects of life, that the biggest corporations among us have a duty to everybody else to really be promoting and doing best practices and teaching, not simply looking how can we create a better vehicle to separate man from his money. And I've worked a lot of interesting cases over the years. Uh, um, Joining you, I was at a client meeting earlier with a elderly widow whose financial advisor, we allege, basically convinced her to turn over all of her money under false and fraudulent pretenses. And I believe in the case. I'm proud to represent her and hopefully to get justice in this scenario. And, there's always questions in all areas of law. Do we need more laws or do we need simply to enforce the ones we have on the books? And when it comes to securities law, we have on our books very strong rules saying that the purpose of our securities markets, not that you always have to be right, but you always have to be transparent. You have to disclose the risks and rewards. You can't go out there and tell um, I Phil and Murray, this is a safe, secure investment when you know it's highly risky. In a court case that goes back years ago, I thought it was a great line by a federal judge who said you can't put in your offering document that there's a potential crack in the sidewalk ahead when you know it's the Grand Canyon 50 yards up.
The intentionality of the words is critical in these places or in this
Correct.
context. Hmm.
Absolutely.
So I got before we get into some of that, I mean, I have a million questions I want to ask you about all this stuff and also keeping along the timeline of your story. But with I've always wondered this, I think in more, in criminal cases where, if you're a defense attorney and it is clear that, to you with the knowledge that you have as the attorney that like, yes, this person is guilty, but they do, they have a right to representation. And how do you manage that? How do you balance that ethically? But like, how is that for lawyers? Because this is a parallel with you said that you did defend some institutions that were guilty of doing some of these things. And it sounds like, the weight of that may have, you know, kind of putting words in your mouth, that it seems like from what you said, maybe the weight of some of that is what caused you to shift lanes a little bit. Like how is that discussed? How is that managed in your profession? Because that is, I mean, it's a tricky thing.
It is. And on some level, I greatly respect. I'm proud to be a lawyer. I think it's a very noble profession. And, w- you know, there is, the American way. Everybody's entitled to a defense. We have our legal system. We have defense, we have prosecution, we have judges sitting in the middle, and we have a system for adjudicating right from wrong, negligence, fraud, criminal misconduct versus civil misconduct. So I don't have a problem. I don't meet a lawyer who does defense work, represents violent criminals. I very much respect the work that they do, and that our system very much needs that person. I just knew for myself, I wasn't that guy. I knew, you know, that I was passionate about an issue. I knew I was passionate fighting for a particular group of people. I hated everything to do with personal injury, medical malpractice, medicine. Never held any interest. For me, I was always fascinated by our securities markets. Um, and I also, I've always hated bullies. I said, I always felt on the defense side, you're kind of representing the bully. I didn't feel I was helping make the world a better place. So, one of my favorite sayings about lawyers is you always want two: one passionate about your case and one experienced. And I didn't necessarily feel I was bringing the passion on the defense side. I was good at it and I knew what I was doing. And I think I gave my client a great defense. But on the plaintiff side, I'm very passionate about it. I don't have a lot of hobbies, but I'm not representing individual investors. I am frequently in DC or elsewhere lobbying on behalf of investor rights, trying to get investors better protected. While I said we have great laws on the books, there's always room for improvement. So for me, for society, I have great respect for the lawyers who play a variety of different roles. For me, where I belonged was always crystal clear.
Mm. So like you nerd out about this in your off time almost. It's like this is just your
I,
thing.
this is my thing. Absolutely. I've tried. I just am not good at golf. And
Okay. Oh, that's
and,
good. Okay.
yeah, when you really enjoy what you do, you're constantly learning how to be better at it. So yes, I don't take any offense to it. I definitely nerd out on it.
Oh, and I didn't like to me like when like I'm a nerd that way about coding with software development. So like I will think about it constantly if I like if something else is not if I'm not doing something that needs 100% of my attention, like whatever I'm working on is in the background of my mind. Like I think that is it's a very endearing thing when someone has that level of passion to me about that. Like I just I don't know. So I appreciate that. And people I didn't mean anything negative by it by any means, but um yeah, I guess as we step into some of this stuff, man, like yeah, I think you already commented on it, like the elderly widow getting taken advantage of is almost like a stereotype. Is it maybe before we get into the more structural attempts that carry out some of these fraudulent things is a lot of in reality is a lot of this stuff on a more individual level like that like this client that you talked about that you spoke with earlier today.
So I think it cuts both ways, actually. There is a lot of individual fraud that goes on there, and each person has their own individualized claims. But then we see a lot of misconduct um, within a lot of entities and companies. So, for every story I have that an Ethel or Murray gets um, defrauded, usually by the financial advisor, the salesman, or other, we also do a lot of work, let's say, against companies that are cooking the books and defrauding all of their investors. I remember you were saying how right every company now is claiming to be a AI expert. That's not against one person. They're looking to take advantage of all their shareholders. Where all of a sudden you look and the only thing they really did is they raised 50 million bucks, and the insiders pulled out 40 million and then claimed the company failed. And unfortunately, we still have a lot of that in our society. People can go back. You remember years ago, there was Enron and WorldCom. And going, you know, a few years back, just on the crypto front, FTX was an exchange that blew up. Hundreds, thousands of investors and others lost money. People might have their own individual reasons and explanations of why they invested, how they got involved. But unfortunately, that took down a lot of people at once.
And those were all Ponzi schemes, right?
So
FTX and Enron and those.
yes, well, say, I'll get a little granular as a lawyer in the answer to this one.
Okay.
So what is a Ponzi scheme? A Ponzi scheme is one type of financial fraud where for the most part, you're paying investors back with new investor money, right? There's no actual profits in the business paying back. So what if you don't actually give any of the money back? You just steal it all. Now you're just a financial fraud. So some of these, with FTX a fraud? Absolutely. But if you didn't get any money back, might not be a Ponzi scheme. You're just for defrauding people. So you ever hear the say that, right? And I always screw this up. All rectangles are squares, but not all squares are rectangles. All Ponzi schemes are a financial fraud, but not all financial frauds are a Ponzi scheme.
Okay. And I guess where at what point that does that line cross between obviously if it's something where they are just siphoning all of the money and not returning anything, yes, that is you're just flat out a financial fraud. But at you commented on the, okay, we've raised $50 million and we skimmed 40 million off the top. At what point, where does that line cross between the disclosure, and maybe this is almost like a too narrow of a question to ask because of I'm sure there's a lot of legal complexities here, but where that becomes okay, these people did defraud us, or I invested in a company that actually failed.
Right. So it goes back to what I said about transparency. What did you tell your investor you were going to do with the money? And what are you telling them is the money you're giving them back? Where is it coming from? So, probably had to admit that I'm a sophisticated investor under the way the courts look at it. So if you came to me and say, look, we're a biotech company and we're looking for the cure for cancer, and I choose to invest $10,000, there's two main things that I should be aware of. One, company might fail because they might not find the cure, and the money is going to research and development. But my goal at the end of the day is that my 10 grand is going to 10x. You're right, you're the company that finds the cure. My 10 grand is going to become worth God knows how much money. Versus many of the Ponzi schemes we see today, they're claiming to already be kind of successful at their business. They're saying, put up 10 grand and I'm going to pay you 10% a year on your money because I've reinvented a great real estate, crypto trading, auto dealerships. And these are all ones we've seen now, life settlements. That we have a successful business. We need capital to grow the business, but you're getting paid back from the success of the company. But in many of those circumstances, your upside is actually frequently capped as the Ponzi schemer says, hey, you're going to make 8, 9, 10% a year. But we're a good, safe, secure business for all these reasons. So the issue is not about the money get lost. There's a lot of investments that go bad because of the inherent risk of the stock market. But it's all about what do you tell the investors you're going to do with that money? That is what creates the fraud. You don't do what you promise, then it's wrong. Some Ponzi schemers get away with it for a little while because, and it's remarkable. We see this actually summer. Ponzi schemers frequently look to invest in other Ponzi schemes because they're all looking for a quick profit to
Oh,
take some of their investors. I always laugh when I see a Ponzi schemer gets taken in another Ponzi scheme. But that guy I gave you my money to invest in. You told me you were doing research and development for a cure for a disease. I believed in that. I believed in your purpose. So I invested. Um, if you go and use that money for something else, well, now you're a fraudster.
wow. That is it is funny that they will unknowingly seek each other out for their own, in search of their own gains from it. So this is with that because I mean you pursue this stuff, right? So when is this typically pulled off by its is there an archetype for the individual that is pushing these messages? Is it a highly charismatic person that's the CEO of this company that is supposedly doing well, even though they may have zero business whatsoever? Like what how does these things usually get out there in your experience?
Yeah, I mean, very frequently the main orchestrator, the main bad guy, right? The Ponzi schemer himself is usually very personable, right? Because he's charismatic, he's able to convince people to invest when he knows full well that he's not being honest and transparent. Takes a certain mindset to operate, go do that kind of business. But for the investors, and we've seen schemes operated from the biggest of banks to, the local guy. And we've done affinity frauds, which is when you take advantage of people in a kind of community. Um, you know, I've been, I've done Ponzi schemes where people from churches to synagogues to mosques, where people come in and say, hey, I'm one of you. You can trust me. Invest in me." To others in the community, and then frequently on what we see is others get caught up in it, and many of these Ponzi schemes, they don't happen in a vacuum. Um, there are promoters, sometimes you're banks, lawyers, auditors who turn a blind eye or have actual knowledge of the fraud, but are making so much money off of it, they don't want to shut it down. We've had a great deal of success over the years of really looking at who helped the Ponzi scheme. And these guys are usually going to jail. The money's done. Uh, who had actual knowledge and assisted the fraud moving forward. And money's powerful. A lot of people, know they should take action, but don't because of the money they're making.
Do you notice that being, I guess, one, an overt, hey, here's a kick, this is the kickback you will get if you're helping me, or is it a, you know, the money just from the get-go is too good, or three, I guess maybe even it's okay, I realize after I've been helping you run this for a year that this is a Ponzi scheme, and now I'm terrified that I'm gonna go down with you if I say something.
Yes. So one of my practice areas within the firm is that we represent a lot of SEC whistleblowers, people who actually go and report these kinds of schemes to the SEC. And our client base here is really runs the gamut from investors who say, something's not right here. I've been investing in this and, they can't consistently have the same return, or the paperwork's not making any sense to them come forward. Sometimes, and they make even better whistleblowers frequently because they have inside information. You kind of something like, right? The number four guy at the company, number five, some guy who took a job thinking he was going to work for a legitimate company, and then sees things that aren't right, speaks up, and the CEO is tells him basically, keep your mouth shut. Uh,
Uh,
or he complains to others. And we've been involved in these against major brokerage firms, the smaller companies that are aware. They come and we report to the SEC, and we have access sometimes to internal documents. And the third bucket is we represent a lot of industry analysts who do due diligence on these deals. They go looking and they say, look, I've been looking at Silver Enterprises. They claim to be mining silver, but based upon their metrics, their numbers, there's no possibility that they're paying investors from the profit of the business. There's something wrong here. Now, you have to have a wealth of information these days to get the SEC's attention, to get them to look at one. But if you have it, I always say you got to deliver this to the SEC in a red box with a bow to say, you need to look at this because look at this wealth of information. You can't just send them an email that says, hey, look, this looks like a Ponzi scheme. Go investigate. You got to explain to them what's going on, give the evidence. But we do a great amount of that work because you don't always know immediately, right? People look at investments all the time. Sometimes you invest and you're working at a company you don't appreciate until you get a little bit in the weeds that something is wrong.
yeah, and with that, so these analysts, right, are some of these just independents that are s- specifically seeking out fraud so that they can make money off of telling the SEC? Because basically my understanding, very surface level that I just read into because I know that I knew you were coming on, but like there's basically, if you bring that information, basically tip off the SEC to something that does come to arbitration, there's money, you get a certain percentage of that payout, correct?
So if you report to the SEC and you're determined that you were the whistleblower, you could be entitled up to 30% of anything over, it's got to be over $1 million collected. However, I don't think it's the main business model of any of these people. And I represent quite a few because the SEC receives so many whistleblower tips and they receive information from so many different people that the statistical likelihood that the SEC is going to move forward with the case is not that great. So it is difficult. So they're usually, it's part and parcel of other kinds of business. There's absolutely short sellers out there. who go out and say, look, I've done my homework, I've done my analysis. I'm not buying the stock, I'm shorting the stock. And here's all my reasons why. I think this is a great public service. I know some people think that being a short seller should have some negative connotation. That's never made sense to me. If you're the guy who does the homework, does the research, and tells everybody, this doesn't make sense to me. This company can't be doing what it claims to be doing, and their numbers don't make any sense. He has a thesis no different than the guy who says, this is why I think the company is going to go up in value. Um, but just because you have doesn't you got to convince the SEC. Not only is it that I disagree with their business model, but they're actually doing something intentionally wrong. They're engaging in fraud. Then you need the SEC to investigate. Then you need them to collect. And if you're a fraudster, sometimes the money's gone. There's no money to collect.
Yeah.
Others are due diligence analysts who could be looking into various investments for clients to see what is a good opportunity. But if they see one that they believe to be a fraud or a Ponzi scheme, same thing. We want these people to come forward and shout out, protect Murray, protect Ethel. God, this is wrong. This is tell the government, tell the public, you might want to think twice about making this investment. Okay. If more people had stood up and said something's wrong with, and a lot of people did, but maybe if more had said Bernie Madoff cannot be posited every month, well, a lot of people would not have suffered. And look, the work I do, I always say, for the investor, it's heartbreaking because many of these people gave their money in under with their trust, with their faith. You walk down a dark alley at night and get bugged. You don't blame yourself, but the guy, points his gun at you and says, give me your wallet. But this is a different psychology. It's really damaging, uh, to give your money to somebody who you think you could trust and find out that they're a fraudster.
Yeah. And I guess maybe while we're here, um, I think probably an appropriate time to talk about maybe, and I'm guessing the difference here is the communication, but multi-level marketing businesses are running and are legal in this country. Like there's Mary Kay, Pampered Chef, these ones that are huge. And I looked into it's something like the only like 1% of people who participate in these actually make like it can make a living off of it. And it's I think only 25% of participants typically make any money like or come in the green, which was kind of mind blowing to me. But is that the separation there is like there's no one's lying to you about what's going on there?
Well, yeah, I think it's a fine line. I've worked on a few multi-level marketing cases over the years. Not a lot because they are very challenging cases, and done right, just like investing, they are permissible. You kind of hit on it that there's a lot that of one's stories out there where the company, 99% of the people end up losing money because all their, if the foundation of the company is simply to bring in more and more people to sell the product, then it's really just a multi-level marketing scam. Okay. A Mary Kay, I think it's been around for years, and I don't want to, let's always put a lawyer disclosure on this. In no way am I promoting or
Yeah.
saying anything negative about the company,
This
but
is all alleged.
they certainly have a line of makeup that
Yeah.
people could buy and put on, right? Others, some of the cases I've been involved in, there was no substance behind the company whatsoever, right?
Mm.
All it was bringing, you could make money if you bring in more people to invest in the company, but eventually you run out of people to bring in and the whole thing collapses. And so they are challenging. I think people have to be um, very careful, very skeptical before getting involved in these. And then remember, it's not necessarily a securities law violation. It's a little bit out of my lane because frequently many of these are overseen by the Federal Trade Commission,
Okay.
um, and looking at it from that regard. And there have been some big cases over the years. But yes, be
Okay.
careful of any club that'll have you as a member, especially if they don't have a reason, if it's only to bring in your money.
Yeah, if it sounds too good to be true, it's Usually too good to be true. It's
The
weird how that.
underlying mantra of all of this. Yeah, nobody has figured out how to have the risk reward seesaw. The greater the risk should be, the greater the reward, and vice versa. Nobody has the high reward safe investment.
We're such just as humans that we're like suckers for the I found my leverage here. I found my shortcut. Like it's something about it. Like it's hard not to fall for that. And it's because you're like, well, but what if, what if I'm wrong on this intuition that I'm having is wrong and I could, be the one who does make it through or whatever. But as when you guys do actually bring these things to court, that that you've already kind of touched on that it is a lot of it is a tangled mess. But the other side of that is you also explicitly said like sometimes the money is gone. And is
Yes.
with that, is that because it's been successfully laundered out somewhere else or to an offshore account somewhere because it's been spent, and then when it is gone, then what real justice is there other than sending people to jail? Or what
So
compensation is there?
yeah, I mean, look, it is an unfortunate reality of every case that we have to look at, right? The great lawyer was told you need three things in every case: liability, somebody did something wrong; damages, somehow they were hurt, lost money; and most importantly, collectability, right? There's somebody who is responsible that could pay. And in many of these, especially in the most egregious Ponzi schemes, the money is gone and it's been lost through many different ways, from the schemer buying houses, cars, toys, wallets, and lifestyle, to promoters, to earlier investors, and a whole host of different. I've seen money disappear in an incredible uh, array of ways. So we do have to look, and that's why I said earlier. One of the questions, these things don't happen in a vacuum. Okay, especially the really big ones. Okay, money has to move through banks. Um, Lawyers, auditors, others get involved. Sophisticated investors require certain, information. Unfortunately, retail investors don't necessarily always know the right questions to ask. In fact, many times I find my most sophisticated and accredited investors don't know what the right questions to really ask, conduct their due diligence. So we've been involved in a lot of cases over the years against what I generally characterize as third-party professionals who I very much believe their responsibility in these cases. Okay. You can't willfully turn a blind eye to obvious misconduct. You know, these banks, these orders, they're supposed to have and are required to have complex systems in place in order to detect these activities. Okay. And once they get involved and they're like, well, these are big clients of this, and they help out these fraudsters. Um, operate their schemes, move the scheme forward. At times when they're named to these operations, they very much can and do bear responsibility in these cases.
So, I mean, it really it seems like momentum wise, it can kind of get away very quickly. If one like one or two or three people do turn that eye or miss it, and it just at a certain point it starts to become a runaway issue. And with
Yeah, one of the best things Bernie Madoff did, he used to tell people if they asked him any questions, look, if you need to answer all these questions, you can't invest with me. Like, he'd make you feel like, the way if you ask questions, then you can't join the club. It made people crazy. It made him nuts. Like, oh, I gotta be part of this. This guy's so good. He doesn't even have to answer the question.
yeah, and he's way
But
smarter than I am. I can't comprehend what he's doing. That kind of uh,
I say to the great wizard.
yeah, yeah. So, but so you commented on the right questions. What I mean, and if it's too open of a question, then just tell me. But what are those right due diligence questions to be asked if you are the investor?
So, yeah, I can highlight certainly a few.
Yeah.
I mean, one is, as a good rule of thumb, for most mom and pop investors, especially, let's say mom and pop, that your average retail investor, don't invest in anything you don't understand. Okay. There's no need for it. There's no reason for it. Okay. I'm always amazed that people spend more time shopping for a new car than they do before they make $100,000 investment. Okay. Understand what you're investing in. But then two key points beyond that. One is I always love the saying, bet on the you want to bet on the jockey, not on the horse. So your first question, who are you investing in? You know, um, who's behind this company? Sometimes if you're looking at, why is this financial advisor? Why is this promoter? Why do you feel that they know better than the next person? Are they properly registered? Okay, if you're working with a financial advisor, check at the SEC and or FINRA's website. FINRA is a quasi-governmental agency overseen by the SEC. They regulate the brokerage industry. There are certain exceptions, and there's financial advisors or stockbrokers, and then there's registered investment advisors. Two different, very important distinctions between the two. But if your guy has no securities licenses, question that. And then at the company's health, who are you investing in? What do they claim to be their purpose? And then why? Well, what is the company? What are they up to? What security do you have behind it? If you know, when I do some of my investing, in one example, I work with an investment advisor. He's got a fiduciary duty to me. He has to operate in best interest. But my money itself is housed at, that's still my own, but, and promoted one, I'll just simply say some of the big houses, Charles Schwab, Fidelity, somewhere. So they could maybe make a trade. I'd like to think that he's smarter than I am when it comes to investing. But if my money itself, he doesn't have access to it. He can't write himself $100,000 check. A lot of investments that go bad, too much control was given over to the Ponzi schemers. Warren Buffett used to make a offer, and I'll butcher this a little bit, but he basically would say, I'll give it a word if you can show me a hedge fund guys who could beat the S&P 500, which is an investment in the 500 biggest companies in America. It's incredibly hard to do, to beat the S&P 500 consistently over a long period of time. And they used to like to highlight that point for people. So you want to make sure the risk reward is there. And therefore, make sure you understand, because clients come to me all the time saying, well, the dividend, the yield seem to be attractive to me. I'm like, well, did the advisor tell you, though, that it's incredibly risky, that you might make a few points, but you risk losing half your principal? The answer always, of course not. Nobody's going to risk half their money to make an extra 2%.
Mhm.
Um, then, like I keep saying, I don't want to give anybody investment advice. You think you have a biotech company that is focused on a wonder drug that could do great things? Risk reward could be there. On the other end of the spectrum, you want to, buy a bank CD and know that, hey, you're only going to make X percent, but your money is basically safe and secure. These are all decisions that each investor needs to make. But, anybody who refuses to answer your questions or can't go deep, can't explain the investment, why are you buying it from them?
This honestly, all of that sounded like very basic. Like, I mean, I guess you did say it's due diligence, but like those seem like those would be common sense things to address that I guess people just don't do because they get sucked in maybe on the numbers there. But um yeah, man. So when the money is gone, because you touched on also like sometimes that money is just tied up in assets. Can that not be used to repay people? Are those things not sold off in these cases?
Sure. So in many cases, the SEC comes in and charges the bad guy for it. And in many cases, they appoint what's called a receiver, somewhat equivalent to like a bankruptcy trustee, somebody who comes in and steps into the shoes of the company to help unravel whatever money is there. I work with a lot of SEC receivers around the country. These guys play a very important role in these cases. So let's say it's a $100 million Ponzi scheme. I always say, for the sake of my clients, I hope the receiver recovers all of the money. But the more realistic outcome is that maybe they, let's say it was a real estate Ponzi scheme. Maybe there was some legitimate real estate investing going on. They recovered 20, 30, 40% of the investor money. Uh, that's great. I'm glad the investors are getting back some of their money. The truth is that you want to help them recover all of their money. You don't care if it's from one or multiple sources of wrongdoing.
But so they will, it doesn't have to be liquid whenever, okay, it's everything is being assigned. They've been found guilty. We are paying back the victims. Like that money, if it is tied up in assets, can still be used to rectify some of that wrongdoing.
Sure. There was
Okay.
one a few years ago that's pretty much wrapped up, and had actually got a little bit of attention recently for the purpose. But long story short, they had raised company claiming that they were investing in auto dealerships. But ultimately, there were allegations that they were not using all the money to buy auto dealerships, that they were essentially running a fraud and using new money to pay old investors. But there was a kernel of truth to it. They were buying some auto dealerships. And ultimately, this was during COVID. If you remember, the price of used cars had gone up fairly dramatically. And the
Yes.
receiver was able to sell those auto dealerships for more than had initially been anticipated. And thankfully for the investors, it helped them recover substantial amount of money.
That has to be a fluke for it and it's worked out that way.
Very rarely happens.
Yeah. But I mean, good for them, right? But it's damn. So
Yeah,
what
but
else, right?
you do raise. I actually would love to highlight one point because you talk about due diligence.
Yeah.
It's always amazing to me the liquidity. You talk about what if it's just illiquid? And many of these Ponzi schemes these days involve products that are the Ponzi saying what's great about this investment, like auto dealerships, is that it's not tied to the stock market. So you don't need to worry about the stock market going up or down. And superficially, that has a great appeal for an investor, right? Yeah, I don't want to see it up and down every day. But the reality that the investor needs to remember is that it's because it's illiquid. It can't be bought or sold immediately. Okay. And when it comes to investing as a general matter, you should be getting greater compensation for the added risk of illiquidity that you can't sell. You get less because the stock market is fluid, it's liquid. You bought it today, you could sell it tomorrow. If I'm going to invest in something until I have a 5 year hold, and no matter what happens, I can't sell it for 5 years, that's riskier than being able to sell it anytime I want. You're supposed to be getting greater compensation. I think a lot of people get very confused about the pros and cons of liquidity. Liquidity serves a great purpose at times, and I've certainly seen schemes where investments need, we've seen many real estate Ponzi schemes over the years, right? You can't just sell the real estate on a dime. It takes time to sell, and you got to debate, should we sell immediately? Should we fix it up? What's the right time? Um, Takes on. But all that illiquidity is not necessarily a benefit. You almost want to begin with, it's riskier. I'm not going to tangent, but I always find that something that a lot of investors don't appreciate.
No, and that's perfect. This is so foreign to me. I've tried investing one time. I tried investing in oil over COVID when it like tanked, and then I got too scared because it kept tanking, and I lost a bunch of money. So I dipped, and then of course, had I waited another 2 years, I would have been sitting pretty after that. But like it was just, this is also foreign to me. It's all interesting, and tangents don't need to be apologized for. But like what?
And look, right? I mean, people oil is the talk of the town this week. It
A
was a
little
great
bit.
investment on Monday. Then it was a horrible investment on Tuesday. I'm not sure what happened today. Yeah, but it's because of geopolitical issues, been very volatile this week.
Yeah, for people listening, we are recording this in early March. So there's the war is going on right now. This will come out in probably May. So, um, but what else along these lines? Again, it's so foreign to me. I have the general understanding of these. types of scams that everyone has, and then the basic reading that I've done. But I'm trying to bridge the gap, obviously, between the fact that I'm not a lawyer and you are. So what am I not asking here that I should be along these lines?
We talked a little about the questions to ask when investing, and it tends to get jumbled. And let me take a few minutes to talk about the difference between frauds at companies, your New York Stock Exchange or NASDAQ listed company versus frauds created by stockbrokers, financial advisors, because it's two different concepts. Frequently, when a company engages in fraud, a New York Stock, that case is going to end up in a class action. We do a lot of cases in federal court against companies that with cooking the books, or engaging in other misconduct. They misrepresented the market. They claim to be AI experts in order to raise capital. And those are the cases that you frequently hear about in federal, that get brought as class actions in federal court. When dealing with financial advisors, now they're helping you pick which companies to invest in. And many financial advisors, probably the vast majority, are good, honest people who want to help their clients earn a uh, earn a profit on their money to help plan for retirement. But there are many bad actors out there, and there are some corrupt brokerage firms out there, right? I mean, the Wolf of Wall Street's firms, that they were bad from the top down. That wasn't a rogue broker operating badly. And many of those cases, if you get into a dispute with your financial advisor, there's frequently an arbitration clause in your customer agreement that says any and all disputes go to arbitration. If they're a stockbroker registered with FINRA, they go to a FINRA arbitration, which is the largest administrator of investment disputes in the country. And they administer hundreds, thousands of investor disputes against stockbrokers every day. And when I say stockbrokers, those are the big firms that people tend to know of: Merrill Lynch, Morgan Stanley, Goldman Sachs, down to the small brokerage firm on the corner. Everybody knows the big six or seven out there, but there's actually, I think, currently just north of 4,000 registered brokerage firms in this country.
Wow.
So, tens of thousands of individual advisors registered at those 4,000 firms. So I handled countless, thousands of FINRA arbitration claims throughout my career. Years ago, brokers were held to basically a suitability standard. Our investment has to be suitable or recommended to the client. Today, they've changed the rule a bit, and now they talk about they have to operate in the client's best interest. But when working with a FINRA advisor, uh, they say best interest, but then when I say I advocate for more investor rights, I'm very concerned sometimes that the exceptions to the rule swallow up the rule. The other type of advisor out there, the most prominent one, are registered investment advisors. They're registered strictly with the SEC. They're governed by a different set of rules. They frequently use arbitration clauses in their contract, but not all of them do. Over the last 10 years, I feel there's been a dramatic shift to more and more investment advisors coming out there. I think there's a logic to it. They're held to a higher standard when making recommendations to their clients. They owe what is a true fiduciary duty to their clients, that they really do have to operate in their client's best interest. Doesn't mean they always do. Some brokers, some investment advisors are frequently swayed by how much fees, costs, commissions they can charge the client, and or products that say, hey, if you raise capital for us, we will pay you a percentage. It's a great question to ask your advisor. What compensation are you earning in the sale of this product? Okay.
Yeah.
You know, 10, 15 years ago, you heard much more about individual stocks. But now everybody knows, right? You could go into an online discount firm. It doesn't cost anything to trade stocks anymore. That's why what I see is many more products. Wall Street has invented a ton of products to take out to the market to sell to people. And I had a great expert once say, the number one guarantee on all of these products is that every feature in the product has a fee associated with it. And it's true. This helps bolsters Wall Street's books and records. There are countless, thousands of different products out there for investors to invest in. There's many structured products that have gotten the attention of the regulators lately, it seems. Um, but when disputes occur, what is the standard your advisor is held to? Is very much an issue in these cases. And then going back to what we said earlier about collectability, when you're dealing with a major wirehouse, I have a lot of issues with the way these firms operate at times. But one of the good facts is that if there's a problem, they have the financial resources to satisfy uh, any investor claim. We have a
Mm.
huge unknown problem in this country that there are many small brokerage firms that tend to push the worst products, and they're in smaller towns and communities where the big banks don't want to service the community. And they push these bad products that tend to blow up, tend to be associated with Ponzi schemes and other investment frauds. And they basically, when things go bad, are able to fold up the tent and move on because they were very poorly capitalized. The SEC, people are always shocked to find this out, does not require a financial advisor to maintain insurance to cover any investor losses and or claims. So we frequently have to talk to clients about the risks that their own financial institution doesn't have the financial resources to pay investors for the misconduct that they occur.
Do you think that's a
Engage
hole in our system, in our legal system?
huge,
Yeah.
huge hole. Um, there's been a lot of debate. They could require insurance. They could simply tell some of these firms you can't operate without certain protocols in place. I'm a member of PIABA. It's a great bar association of lawyers who tend to represent victims of securities and investment fraud. I'm on the board of the organization. We frequently put out white papers and thought pieces on ways the system could occur, can improve. And this has been a hot topic for years. I mean, there is nothing more heartbreaking than looking at the client who's already been defrauded, saying, unfortunately, the brokerage firm that you dealt with has um, more liabilities than it does assets. And that even if we pursue a claim, you run the risk that you're not going to be able to collect.
I guess at that point, I mean that small business that just packed up shop, are they even liable for anything? I guess criminally for because I mean they were operating within the bounds of the law, right?
They were operating, yeah. That's over there. So the SEC, this is an SEC issue. This is the SEC needs to improve on this issue and fix this problem. Um, it's not that there are instances where we find unregistered brokerage firms, unregistered promoters who acted outside the bounds of the SEC rules and regulations, and that raises a whole different issue. But here I'm talking about ones that technically followed the rules, but we need improvement on the in the system.
Yeah, because I mean that's just a small nuance that you might miss in doing your due diligence. For they are licensed, they are doing these things, and somebody like me who doesn't know what they're doing thinks that they've tried doing their due diligence and just missed that. Even though these guys are legal, there's nothing holding them accountable there. It's scary.
Yeah, when they know that they could just simply fold up the tent and move on if things go bad, it doesn't encourage them to stay on the straight and narrow.
Yeah, absolutely. You're opening the door for someone who is entrepreneurially minded with no morals to come in and really wreak havoc on a town or wherever that is.
Yes, yes. I mean, look, back in the day we called them boiler rooms. Today we still have some. For the unregistered, I mean, this is, you know, part of the new world that we live in. I mean, we get calls and have seen people defrauded by AI bots, right? I mean, I assume it's you talking to me live here on this thing, but technology now allows us to have a fake recording. I've seen major celebrities promoting spots where I know that that's not actually them talking. They're going, but bad actors are creating these bogus videos so you could think, oh, Mark Cuban today is pushing this penny stock.
Yeah.
Mark Cuban is not on your Facebook feed pushing a penny stock.
Yeah, but I mean, I've heard on a more on a lower level, like even there was specifically, I heard a podcast talking about this, the people getting scammed by people like someone who was using AI to impersonate Keanu Reeves and saying, he needed money for this. And it was like love scams where people did this, it's kind of, it's wild. And obviously I've been blind for almost 7 years, so I haven't gotten to see like how I haven't gotten to see just how indiscernible all of this stuff is from reality, like visually, if we're gonna fake a FaceTime call or whatever, but it's just such an interesting and it's horrible, right, that it's there, but it is kind of fascinating that that is the time that we live in. Uh,
Yeah, new technology creates a lot of interesting opportunities for good and bad.
Yeah.
I also, you can't stop the future, but yeah, people need to realize um, this is always cycling. The world is always changing, and unfortunately, it's that much harder for seniors and older people to really appreciate how quickly the technology is changing that makes them that much more vulnerable to be taken advantage of. But I had a client, it really was an epiphany for me. Recently, say you have to look at this website. How could anybody have known this was a fraud? And he shows me this website that he had invested in that turned out to be an offshore bogus fraud. And, he just couldn't imagine that these days a fraudster with the ability could put up a website like this in a matter of days.
Mm.
Um, and then constantly just swap out domain names. It's it's harder. I'm sure you are much better than I am. I have I'm starting to enter that next stage of life. I mean, I sit here and I talk about every days when we debated getting cell phones and if the internet is going to be. I have a you know, I have 20-something-year-old kids. Like, they look at me like I'm nuts when I tell them something like that.
Yeah, I think all of that's, it's you can mitigate a lot of that by just staying with the times, right? Like obviously you're up to date on the tech stuff now, man. It's just I think that's part of that thing in life where just always be learning and you'll stay abreast of it. And obviously I would hope you've spent your career trying to salvage some of these situations for people. You'll be good, man. But
Well, like I say, right, I don't need to be, your expertise in coding, my expertise on, how to handle an investment fraud case. You're going to keep getting smarter about investing. I'll appreciate AI more and more.
yeah.
And absolutely creates an opportunities. But, I like to, and I enjoy from the angle of warning people, though, to have to be more careful, right? It's, you know, even there are forces who are learning very quickly how to use this technology.
Yeah, and probably faster than the general public because again, they're incentivized a lot more to do so because there's a huge potential gain there as opposed to where if you're just going through life and you're like, hey, I'm busy, man. I got a lot going on. I just got off work. I gotta take this kids to practice. Like it's an asymmetric incentive kind of structure there. But is there anything else before we start to wrap this up and make sure people know where they can find you that you want to cover?
So, I think we covered, you know, my expertise, where I think that's the class what we do, right? The three buckets: the companies that engage in financial frauds, the financial advisors, stockbrokers who end up selling these schemes and frauds and Ponzi schemes, and then the ability that there are multiple different ways to report the fraud, to recover losses, whether it be an SEC whistleblower claim, a arbitration claim against the advisors, or class action claims against the the bad guys, the bad actors, the bad companies, and those who assist or aid or bet their frauds. And I always like to make myself available to anybody who has questions about this. If they wanted, I'm not looking to do due diligence for anybody. Please, I can't. If I do have to pick stocks, I'd be doing that instead of being a lawyer. My only job is to remind people that's not easy to do. Um, on these schemes. I kind of enjoy that. A lot of people, if they don't even remember my name, they just know that I'm the Ponzi scheme guy and how to help unravel and recover the investor losses in these circumstances.
Well, that's enough, right? And they'll know where to obviously they can Google Scott Silver, and I think you'll come up with a list of other things that you've been cited in at this point. But where can people find you and your team?
Right. So I've always liked the name. And Scott Silver also apparently wrote the Joker movie and a few other movies out there. So a lot
Oh, really?
of me. um, right. So he's getting a little bit of attention the last few years. So my primary website that we launched years ago that focuses heavily on the stockbroker misconduct and FINRA arbitration claims is at silverlaw.com. And then I became two other websites that are very creatively made for the work we do. One is securitiesfraudattorneys.com, which focuses heavily on the claims against the companies and the Ponzi schemes and how to go prosecute those claims. And then the other website is secwhistleblowerattorneys.com for those who think they might have a viable whistleblower claim that they want to bring to the SEC's attention. Uh, Otherwise, my 1-800 number, if anybody just wants to call me directly, is 1-800-975-4345. Or you can shoot me an email at ssilver, so two S's, ssilver at silverlaw.com.
Sweet. All sorts of places to find. Awesome. Thank you for coming on here. This was a different kind of episode than I normally do, but it was just I don't know. It's like morbidly fascinating isn't the right word, but it like darkly is interesting. It's yeah, and it's stuff that I think it can help people. There's at least some knowledge to glean or stuff to remind your grandma of if she starts mentioning that she's looking to invest in something. Like, get a lot of good information. So thank you for coming on and breaking it all down.
Now, Zach, it was a pleasure. I really enjoyed. Hopefully, gave one or two nuggets. Think I'll finish off with the one of one of the key investment ideas too, diversification. Right, a Ponzi schemer is only going to sell you his Ponzi scheme and try to convince you to give all of your money. It hurts a lot more to lose 50% of all your money than a larger percentage of a very small piece of your net worth. So you know, never tell people how to invest, but spreading it out a little bit of diversification goes a long way. And again, I just appreciate you having me on and give me a chance to talk about these issues.
Yeah, absolutely. And thanks everyone at home for listening to another episode of Going In Blind. I guess the big takeaway there is diversify and just do basic checks, man. Do protect yourself before you wreck yourself, I think, as the kids say these days. So I think I'll leave it at that. If you've been, again, if you've been listening or watching for a while, either rate and review the show wherever that is that you're listening, or follow us on YouTube and share these things around. Hopefully instill a little more curiosity into the world and spread some useful information. So with all of that, I will see you next time. Bye.